Greer here with the TLDR version of your market update for those of you who'd rather watch the video than read the report. So we're going to talk about statistics for September in the Northern Virginia area. Hard to believe, but the third quarter of the year is behind us. We're into the fourth quarter. So we're going to recap what we've been seeing these first three quarters of the year, starting with average days on market. Back in quarter one, we saw homes on average sitting on the market for 23 days. Quarter two, which was the crazy spring market that many of you all are aware of, homes on average were on the market for 14 days. That number ticked up to 17 days in quarter three, and we can expect that to continue to rise as we go into the fourth quarter, where we typically see a lull because of the holiday season. The next statistic we're going to look at is average sale price in the Northern Virginia area. Back in quarter one, that number came in at $613,700. Then it really spiked in quarter two when we were seeing our competitive spring market all the way up to $665,000. Settled quite a bit in quarter three, down to an average sale price of $634,000. And we expect that number to settle a little bit more even going into the fourth quarter of the year. Then I want to talk about average sale to list price ratio, which I find to be a really fascinating number. What the home is listed for compared to what it's sold for. So in quarter two, the very competitive spring market that we saw, the average sale to list price ratio was 102.8%. So say a $600,000 house would have sold on average for $618,000. That is on average. We saw some homes go way above list price. It was a very crazy time in the real estate market. Now, in quarter three, we were at about 100.8%. So that same $600,000 house would have sold for about $604,000, $605,000. So you can see that trend. That's an indicator of the trend we are seeing in the market right now. So things are absolutely settling down. It's becoming a much easier time to buy, but at the moment we're still seeing some low interest rates. So that means if you're a buyer, we're in this little pocket right now where things are very much in your favor. So we expect interest rates to rise over the coming 6 months to a year. The Fed has been very vocal about slowing down their purchase of mortgage-backed securities. Those are the bonds that set the benchmark interest rates that we pay attention to. So we actually in September saw the first average interest rates go over 3%. And there is no indication that things are going to reverse back the other way. So interest rates are going up. That means if you have been waiting to buy or to refinance your house even, this is the time. Things are not going to shift back to the low rates and the low cost of lending that we have seen in the recent months. So if you want to talk about buying, selling, or even refinancing, I would be happy to help and talk through your real estate needs. Greer is here. Hope you have a great day and take care.